Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka, Tuesday morning, and it happens to be the weekly FNO expiry as well on the Nifty. So yes, crucial day in terms of the market movement. Yesterday, of course, we didn't start on a great note, but the good part is that we managed to reclaim that 26,000 mark towards the end of the session. In fact, even the breadth turned positive by the end of the session. So yes, that was something that we took heart from. But the big question is today, the GIFT Nifty is hinting at a cut of somewhere around 80 odd points. So looks like we are poised to take out the 26,000 mark at the open. But the key question is whether we can stage another comeback like we did yesterday, and whether buying emerges at lower levels. And we managed to end the day as well above that 26,000 mark. That happens to be the crucial support zone. But that's the key question actually, whether we manage to defend 26,000 or are we looking at 25,900 being taken out, given the fact that, as I mentioned, the start isn't likely to be that great. In the pre-open, the Nifty is down somewhere around 75 points, 25,950 or so. So yes, so lots to digest in terms of stock-related news as well. We'll put the focus on the likes of Britannia, Delivery, etc. Keep your stock-related queries coming in as well. We'll try and get them addressed by our technical expert who will be joining in shortly. And of course, keep them coming in with the hashtag AskMC, and we will try and take them up. So let's start the show, but with a look at the top stories at this hour. Wall Street ends lower as AI sell-off continues. Nasdaq falls 137 points, while the Dow declines over 40 points. Asian markets are trading lower, and the GIFT Nifty is suggesting a flat start for our markets. When it comes to the US markets, what traders will be watching out for is the November payrolls data. Crude oil prices slip as tensions between the US and Venezuela escalate, fueling oversupply concerns. Meanwhile, gold pairs gains as investors await key US jobs data. Insurance Laws Amendment Bill will be introduced in the Lok Sabha today, which allows 100% FDI in the sector. This comes after the bill received the Union Cabinet's nod on Friday. The government will also be presenting the Viksit Bharat Guarantee for Rozgar and Ajivika Mission Bill, which will repeal the Mahatma Gandhi National Rural Employment Guarantee and bring a new law for rural employment, will be tabled today. Authorities invoke stricter pollution control measures as air quality in Delhi remains severe for the third straight day. Construction is banned, primary schools go hybrid, while over 220 flights were cancelled yesterday at the Delhi airport. All right, those are the top stories at this hour, but just a quick recap of what really transpired yesterday. As I was mentioning, we staged a very smart recovery from the day's low. We were at a point where we were about to take off that 25,900 mark as well, but thankfully that didn't happen, and we did manage to stage a good recovery. FMCG, PSU banks and IT, these were among the top sectoral gainers, and that lent support to the index. The Nifty Bank Index, by the way, recovered almost 400 points from the day's low, and in fact that index managed to end the day in the green as well. And another point that deserves mention is the fact that the breadth of the market turned positive, and although it was 1:1, but the breadth was skewed in favor of gainers yesterday. Another talking point has been the currency. Continues to make fresh record lows. Yesterday, it made a fresh record low, closing low of 90.73 versus the dollar, and this morning as well, it has hit a fresh record low. Right now, the rupee is at 90.81. So yes, no respite for the currency, so to say, and that has, of course, become a talking point. And of course, it is also spilling over to sentiment in the equity market as well. But let's see how things really pan out today. In terms of fund flows, foreign investors were net sellers to the tune of almost 1,500 crore rupees in equities. DI net buying continues. Almost 1,800 crore worth of equities were bought in the cash market on a provisional basis. But yes, FIIs, I beg your pardon, have pulled out more than $18 billion from the equity markets, Indian equity markets, this year alone. So yes, it has been exodus, so to say. But let's see whether 2026 signals a reversal in trend or not. In terms of the FNOQs, put call ratio climbed to 1.18 vis-a-vis 1.15 in the previous session, and the stock that will continue to be in FNO band today is Bandhan Bank. But to understand the texture from here and what to expect in terms of where the Nifty Bank and other stocks are headed, let me bring on board Ajit Mishra, Senior VP Technical Research at Religare Broking. Hi Ajit, good morning. Thanks a lot for joining in. Always a pleasure chatting with you. Yesterday, we did stage a smart recovery from the day's low, but given the fact that it's expiry today, Gift Nifty is hinting at another 80-point cut. Also, the fact that rupee has been consistently making record lows today as well. 90.8 has been breached, very close to 91 handle now actually. So how will this bode for the headline indices, so to say? 25,900, should one take that as the key support level on the Nifty?
Yeah, good morning, Nandita. So, Nandita, yes, it's a kind of like a roller coaster ride that we are currently experiencing in the index, at least. Means, like on every occasion, we inch closer to around 26,000, 26,100 levels. There's something or the other which comes up and, push the markets lower. But at the same time, the good part is that the key sectors, banking and IT, they are holding strong. Then we have other sectors on a rotational basis which are also offering support on every day. So it's a kind like a tussle which is going on around 26,000 mark, and after making a new record highs, it's natural that you see some consolidation before you mark the next leg of the up move. So as long as Nanda we are holding above this 25,800 mark, one should continue with buy on dips approach in the market, with 26,100, 200 being the positional targets. For the major clues, because we don't have any major event now, be on domestic front or a global front, rupee weakness definitely is denting the sentiment. There's no doubt about it. But at the same time, the kind of commentary that we are hearing from the Apex Bank and the economist as well, that it's not a major concern as of now, considering that the inflation is already under control and RBI is not intervening as such, considering the export challenges that currently we have. So yes, amid this rupee challenges, as long as we are maintaining above the key areas, one should continue to focus on the quality names across sectors, especially the private banks, auto, metal, and select stock from the pharma and IT basket as well.
What about FMCG, Ajit? That index also made a good comeback yesterday. HUL, Marico, Dabur, I think these were some of the names that did well yesterday. Would you look at them at all now?
So certainly means see, when it comes to the sector is currently underperforming because we are still trading below the major averages. But at the same time, we have handful of names like Britannia, Marico, which are trading at the record highs. Then we have stocks like Godrej CP, wherein we are seeing early sign of reversal. Selective buying definitely can be considered, considering that we are seeing volatile swings in the rate sensitive basket. So yes, few names from the FMCG basket and the other defensive spaces can be something that one can consider going long. Basis they are the key support areas.
Okay. Of course, you mentioned private banks. Which are the private banks that are looking attractive now? And, what are the resistance levels on the Nifty Bank Index? Given the fact that we made a very smart recovery from the day's low on the Nifty Bank Index, over almost 400-point recovery. Would you shift your resistance levels a bit higher? What are you working with?
So banking, in fact, Nanta, if you see that in the last 3 weeks, we are strongly holding the 20 EMA, which is the first line of defense. So though we penetrated that zone intraday for brief, but we managed to hold that area. Upside around 60,100, 60,500 is something that we are eyeing as the next major hurdle. For the intraday, 59,800 might also act as an immediate resistance. Broadly, 58,400, 58,800. That's the zone basically, where we expect buying interest to emerge in case if there'll be any further dip. Within the private banking space, Axis, Kotak, IDFC First Bank, these are some of the names which are holding strong. HDFC, ICICI, the key players, they are still witnessing consolidation. The focus should remain on the other names like Kotak, Axis, and IDFC First.
Okay, got it. Ajit, just about 2 odd minutes to go for the markets to open. Would you like to share your recommendations for our viewers this morning first?
Yeah, certainly. So, we were discussing about FMCG. Britannia definitely looks very promising. Means after a marginal consolidation, with hardly any retracement from the record highs. This shows the stock has potential to outperform within the FMCG basket and overall market as well. So 58.30 is what one should maintain as a stop loss. Currently the stock is quoting around 6,038 mark, and 64.50 is positionally what we are eyeing as a target zone. Then from the energy basket, OMCs, they are doing exceptionally well. Means in the last two trading session, we have seen a strong traction and we expect this recovery to further strengthen. So IUC from the OMC basket is something that you can look for fresh long also, with 164 as a stop loss and 178 as a target area.
Okay, Britannia and IOC, two recommendations. Just want to point out there's some bit of news flow in terms of Britannia this morning. Subhashish Basu has been appointed as the head of dairy business. He was earlier the CEO at Anik Milk, and he has also been associated with Pratap Snacks, Mother Dairy and PepsiCo. In fact, current dairy head Abhishek Sinha has been elevated to Chief Sales Transformation Officer. And recently we had Rakshit Hargave as well, who was appointed as the MD and CEO with effect from the 15th of December. So yes, Britannia there, in focus. The stock, of course, up somewhere around, almost 0.5% or so, just about in the pre-open session, of course. With just about seconds to go from the market open. But this is one stock that will be in focus, aside of delivery, that has launched an on-demand intra-city offering in Mumbai and Hyderabad via Delivery Direct app. Now, this will offer pickup within 15 minutes of booking, and it will be catering to small businesses, D2C brands and individuals as well. And the company, of course, will be expanding its service to more cities after Mumbai and Hyderabad. So this is another stock that will be in focus. All right, 20 odd minutes to go, I beg your pardon, seconds to go for the markets to open. But let's shift focus on some other stocks as well that should be on your radar. I just want to point out some of the stocks in news. BL Kashyap is another counter that will be in focus. It has bagged an order worth over 600 crore rupees, so keep that on your radar. Newgen Software is another one that has bagged a 39 crore rupee order from a leading public sector bank in Saudi Arabia. So that's another one that will be in focus. Okay, let's take stock of how the markets have opened up. As was being expected, it is a start with red across the screen. 25,950 that has been taken out. 88 or 90 odd points down on the Nifty. 270 points down on the Sensex, the mid-cap index as well, moving pretty much in tandem with the benchmarks. It's down by 0.3%. The breadth in favor of laggards as of now, marginally so, 794 advances to 923 declines on the NSE. So skewed in favor of the laggards. Nifty Bank Index, pressure there as well, around that 59,300 mark. But let's take a look at some of the other sectors and how they are taking shape. Okay, so media is one pocket that's doing well. Media index yesterday as well was among the top gainers. I think that index gained somewhere around 2%. On the back of good gains in stocks like DB Corp and even the PVR for that matter, because Dhurandhar has entered the 350 crore rupee bracket. So yes, that stock was in focus. PVR. Today, IT, that's down 0.5%. I think that's the biggest sectoral laggard. Despite the rupee tailwind emerging, IT is under pressure. Yesterday, IT made a good comeback in the session, but today IT is taking the lead when it comes to the laggards, followed by banks, metals, autos, PSU banks. All those sectors are trading with mild cuts. No big cuts, but the texture is pretty much on the downside. In terms of the individual movers, Eternal is the top laggard, and some of the other names are the likes of Axis Bank, HCL Tech, Infosys, Geo Financial, Hindalco, Sun Pharma, TCS. So mix of IT, banks, pharma. These are some of the stocks that are under pressure. All metal names, Tata Steel, JSW Steel, etc. under pressure. On the flip side, gainers list is slim this morning as well. Bharti Airtel, that's the top Nifty gainer, up just about 1%. Apollo Hospital, Grasim. Some consumption names are doing well. Tata Consumer, Asian Paints, they are holding out, and Kotak Mahindra Bank as well, marginally in the green, but from the banking lot, this is kind of holding out as of now. Interglobe Aviation, mild gains coming in. I think it will be the fourth straight day of gains for Interglobe Aviation after the kind of badgering it has seen on the back of the flight disruptions. But today, fourth straight day of gains on and Interglobe Aviation as well. Ajit, coming to you, Interglobe, what have you been doing in these last 4 days when it comes to this particular stock? Of course, it got hammered, but trying to make a rebound as operations normalize. How would you look at the stock?
So yes, Nanta, in fact, there were names from the MS basket also, wherein we were seeing that news-related, triggers, resulted in sharp declines, and similar kind of decline was witnessed in Indigo. But now things are stabilizing on price action as well. Means in the last 3-4 trading session, the kind of range that we were seeing the stocks were witnessing, that has narrowed. So it's kind of like a pause or a base formation activity which has already started, and gradually we expect this things to build. And Indigo 5200, 5300 is something that the stock might attempt. Means this 4700 mark, which was the support area, that also coincides with the critical moving average on the weekly charts, 100 EMA. So that gives us confidence that broadly is likely to consolidate and eventually inch toward 52, 5300 mark in the near future.
Okay, things seem to be normalizing on the charts as well for an Interglobe. But shift focus toward delivery. Of course, it has launched an on-demand intra-city offering both in Mumbai and Hyderabad. The stock, is extremely flat. No big moves. In fact, as we speak, it has slipped into the red as well. And the stock has been on the back foot if you look at the last 4-5 weeks or so. How would you look at delivery? Would you say that there could be any kind of up move from here? Would you say it will remain in the consolidative mode that it has been in? How are things looking like on the charts?
So Nanta, from this level close to around 240 to 500 was a vertical move, and from last 3-4 months we are seeing a bit of a corrective trend unfolding. The good part is that it seems like that bottom has already been made. It's just that we need some more time to consolidate. Means in this range of close to around 420, 25 on the higher side, 390 on the lower side. That will continue to the area where the stock might continue to move. And decisive breakout above the upper band can result in next directional move. So as of now, consolidation is more likely. So if the view is short term, one can avoid. If somebody wish to accumulate, yes, it's a time basically they can start accumulating at current levels, add more in case if it sees any dip around 380 area, with 370 as a positional stop and 420, 430 as a positional target zone.
Okay. Stock has already bottomed out. Delivery. Okay, then let's shift focus to some queries. Then a lot of them coming in, so I would want to get as many addressed as possible. There's a query that is coming on water stocks. VATech, Wabag, and Iron Exchange. NP Gandhi wants to know your thoughts on these particular counters. Iron Exchange, of course, is in news. The company has bagged a 205 crore rupee order from Raisin Energy, Inox Solar. This stock is in focus. The stock is in fact up somewhere around 6% or so as we speak. It has been on a good trajectory. If you look at the last month, last 5 days as well, the stock has seen good traction. How are you poised here? Because the stock still, has quite a lot of distance to cover when it comes to its 52-week highs. It's in excess of 730. So at 404, how are things looking?
So yes, this week definitely is a positive one. Means for 50%, we have already seen the stock has gained. Volumes are also very strong. So this indicates a possibility of further recovery, let's say towards 440, 450 area. So we still have decent 8 to 10% kind of an upside left. So but yes, it's just a recovery because the kind of trend that we are seeing the stock is currently trading in, this zone would be difficult to cross. So if you are trading for a rebound, you can consider with the stop loss at 390 and upside around 440, 450, one should reevaluate.
Okay. Well, hope that answers your query. Let's shift focus to the next one then. Samir Nayak wants to know your thoughts on solar industries for a fresh entry. Of course, he's pointed out that the stock has been on a downward trajectory for the last few months. Yes, it has been under pressure. Look at the last 6 months. I think it has shaved off quite a bit, 30%. Is it a buy at all at these levels?
Sunanta, yes, we are still seeing that the stock is gradually drifting lower. Volumes are certainly down, so which is a positive sign. But we have major support around 11,300, 700 zone. So we still have 400, 500 points. We are away from that area. So and still we need to see some early sign of recovery or at least consolidation. So as of now, it's an avoid. Maybe closer to around 11,700 zone, 300 zone is something that one can start nibbling selectively with 11,000 as a closing stop loss.
Okay, that's the view. Hope that answers your query as well. Moving on to the next one, Nana Prakasam wants to know your thoughts on a Bombay Burma. Stock is extremely flat, hasn't really shown any traction in the last month, last 5 days as well. If you see, any thoughts? Bombay Burma, how is it really poised, and what are the signals that's coming out from the charts? It's at 1860 or so. What is the next target to watch out for here?
So it's been almost 10 months now that we are seeing this band continuing 1740 to 2100 mark, and currently we are closer to the lower band. Stock is still trading below the major averages on the daily chart. Volumes are very thin, so it's not a stock to trade in. Means in case if you are investing, definitely you can consider the stock with 1700 as a key area. But avoid in case if you're planning for any short-term trading position, because sideways negative bias might continue maybe for weeks.
Okay, that's the view. Investment purposes, perhaps yes, but trading purposes, no. That's the advice on Bombay Burma. Okay, let's move on to the next query. Shweta Naidu wants to know your thoughts on CG Power, which she holds at 660. She wants to know whether one should hold on or buy transformers and rectifiers. Interesting query. CG Power, I think her buy price, she mentioned 660, mild profits, but the stock has been stuck in a downtrend as well. And transformers has had some very dramatic moves on and off. What would your suggestion be?
So yes, in fact, she can consider exiting CG Power, considering that the stock is still, struggling, and still I feel that trail is not out of woods completely. Though we have seen a very strong rebound in the last two trading session, but we still have something like to build on. Means there should be some base formation before we say that the stock has bottomed out. So which is not the scenario yet. But yeah, CG Power can witness further correction. So as of now, she can consider exiting and sit on cash.
Okay, consider exiting and sit on cash. That's the view. Shweta, I hope that answers your query. Okay, the next query is on AU Small Finance Bank from Solomon. A lot of mid-rung banks like Federal Bank, Canara Bank, they are finding favor with analysts. But what about AU Small? Would you advise looking at this one?
It's among the top performing name, no doubt about it. And the stock is still, quoting around the record highs, maintaining above the short-term averages. So this indicates momentum also. But after this phenomenal move, consolidation is more likely. So aggressive longs is something that you should reframe. If you have existing position, 950 is the immediate base, the 20 EMA zone. So as long as we are maintaining above this mark, you can continue to hold your longs. You can buy fresh also, but keep the position size in check, because there is a possibility that we might see some bit of a consolidation or profit taking in the near future before the next leg of the up move.
Okay. The stock could see some bit of a profit taking. That's the answer. I hope that answers your query really. But shifting focus to the next one, then there's one that's coming on a JM Financial. Don't have the person's name, but wants to know your thoughts on how the stock is poised over the next 6 months. Okay, the stock hasn't shown a lot of traction. If you look at the last month, even if you look at the last 6 months, it has been pretty sideways. How does the next 6 months stack up for a stock like GM Financial? Anything that you can pick up from the charts?
So trend is positive, no doubt about it. It's just that we are seeing profit taking or underperformance in mid cap and small cap names, but still it's comparatively better when it comes to the long term texture. and 125, 128 is a very strong base area. It's just that we have multiple resistances closer to the current area. So consolidation is likely if you talk about shorter duration. But yeah, from 3 to 6 month kind of a time horizon, definitely one can continue to hold their long positions with 125 is stop loss. And higher side, the moment, let's say we cross 160, 65 levels decisively, we are set for the next leg of the up move. So it looks okay if the view is more than 6 months.
Okay, that's the view on GM Financial. There's a query on Indigo, but we've already addressed it. Perhaps you could go back in the feed and check out Ajit's answer on that. But Eternal, there's a query on this particular stock from Pankaj Kajalia. Wants to know what needs to be done. He has 2,000 shares at the rate of 299.7. The stock has seen, its fair share of profit taking. Today as well, it's down almost 3% to 90.4. That's where it is as of now. Of course, he's kind of making a loss. How would you advise him to go about his position?
So yes, in fact, we were seeing bit of a recovery rebound attempt from the long-term moving averages. So basically, 287 is the mark where we have the 200 days of exponential moving average placed, and we are currently hovering around that mark. I assume that he have just recently bought it. 285 should be his stop loss, because in case if it fails to hold this area, then probably we may see further decline, and being top underperformer in Nifty trade today. So this zone is something which one should be closely eyeing on. Upside around 300, 305 is the strong resistance area also. So the upside also seems capped. So in case if the view is short term, he can consider exiting on any bounce around the resistance area and wait for a decisive close above 310 for any sign of reversal.
Okay, that's the view on Eternal. But, I want to take up this query on Power Grid from Sukruta Bhide. Wants to know your thoughts on, what should be done. Holds positions at 292 rupees, making a loss here. The stock is in fact just coming off its 52-week lows as well. And it has been, an underperformer. Look at the YTD returns. It's down 16%. And, there's a V-shaped kind of a, structure on the charts I can see, but hasn't really been able to hold on to the kind of recovery it saw somewhere around the middle of the year. How are things looking? Is the weakness likely to persist, and what should one do if they are stuck in this counter with a loss?
Near future definitely looks weak to us. Means the stock has already shifted below the critical support on weekly charts, also around 270 mark, and we are gradually drifting. The last major support was around 245 mark, from where we saw this stock witnessing rebound. So still we have roughly around 8-9% kind of a decline left. In case if it fails to reclaim 270 decisively in the near future. So as of now, if the view is short term, she can consider exiting at least partial position here and wait for a dip towards 245 to re-enter in case if she wishes to continue with the same name, or switch to the private banking names like Access Kotak, after exiting this position, and for Power Grid, wait for a decisive close above 280 to re-enter.
Okay, that's about Power Grid. One last query then. This one is coming in on NMDC from, MV Hari Krishna. He's been holding this stock and, wants to know what, in fact, he just wants to know what needs to be done. Should he add more, exit, hold, what's the call? NMDC has seen good traction along with the metal pack, but it has actually underperformed the rest of the metal pack, so to say. Within the metal basket, what are your thoughts on NMDC if one is holding on?
So we have recommended this to our clients also of late. So that's a disclosure, and we believe that the stock is set for the next leg of the up move. Means 72 to 79 is broadly the range. We were very close to the upper band. It made an attempt yesterday, but couldn't surpass. And today we are seeing marginal profit taking. So as long as we are maintaining above 74 mark, one can definitely continue with the long position. Above 79, 85 to 90 is something the positionally the stock might test. So yes, you can continue with your longs. You can buy fresh also.
Okay, continue with your long and you can buy fresh also. That's the view on an NMDC. Just want to get in, one last query then, but it's a recent listing. I don't know how much data you'll have. This query is on WeWork, I think Mrudan Gameshwar wants to know your thoughts. I think he bought 630 shares. 630, no, he bought 53 shares at the rate of 630 rupees and wants to know whether he can add more or, whether he should exit. The stock, of course, is quoting at 585 or so. I know you'll have limited data, but, any thoughts on how one should navigate a stock like WeWork?
So earlier, Nandita, post listing, we were seeing this range playing out, means 600, 660. Now this range has shifted to 610 to 580. So if the view is short term and he feels stuck, 580 definitely is the only area which he should watch out for. Avoid adding to your loss making position. If the view is long term, definitely you can consider, means considering the kind of theme that you are playing out. But for the shorter duration, I believe that this consolidation or sideways might continue, and a decisive trend reversal can only happen the moment we cross 620, 625 on the daily charts.
Okay, 620, 625, crucial zone to watch out for. That's what Ajit has to say about the stock. But with that, we've come to the end of the query segment. Ajit, would like to thank you for taking out time and joining in and sharing your thoughts. Always a pleasure. And hopefully, before the year ends, we'll touch base once again.
Certainly, Nanda. Same here. Same here. Take care. Bye.
Thank you. Thanks a lot. On that note, quickly take a look at the market before we bring on board our next guest for today. It's kind of, become even more weak at the index level. We're down over 100 points now on the Nifty. Close to that 25,900 level. Let's see whether we can defend that or not. 25,915, that's where we are at the current juncture. Sensex down almost 400. Mid-cap index, yes, here as well, you can see pressure building, 0.5% down now, the Nifty mid-cap index. And the breadth has worsened, 1:2. That's the NSE advanced decline ratio. So, yes, breadth as well, not looking all that great. The bank Nifty is down 0.5% or thereabouts. But on that note, let me bring on board our next guest for today. Joining me is Nikhil Khandelwal, Managing Director, Systematix Group. Nikhil, lovely chatting with you this morning. We've had record highs on the index, but of course the broader end of the market's painting, starkly different picture. What is the next, cue to watch out for? Of course, we've entered a consolidation phase after hitting those record highs, but some stocks down 30-40% from all-time highs, pain clearly visible, people not feeling great about their portfolios, enthusiasm is actually missing at these levels. How would you expect markets to move on from here? What should the strategy be? Should one be very stock specific or should one take a top down approach? How would you be looking at the market here on?
Hi, good morning. Thanks for having me. No, clearly, I think the markets come off and it's visible. While the small cap and mid cap indices have come off significantly, the larger index has also been kind of flat to negative in the short term. Where things stand today, as we see the earnings multiples of the market, we are at close to about 22, 23 times TTM PE for the index, which is actually lower than the average of about 25 to 26 times, which the index trades at on a over a past 5 to 10 year period. So definitely the earnings multiples have come off. But at the same time, what is also happening is that the overall earnings momentum, the EPS growth in the market is also actually come off significantly. If we are seeing the data of companies over the past 8 quarters, the EPS growth across the Nifty constituents is between 5 to 7%. So to answer your point, I think the main trigger which the market is looking at is earnings growth. Earnings momentum driven by better volume growth needs to be quite visible. We believe that as we reach fag end of this year, as the government stimulus on GST the export oriented hit on export oriented businesses over in the first half of this year. As they start to stabilize towards the end of the year, we will start to see some earnings momentum come, and that's where the market will start to find its feet. For the next 3 to 4 months, I think it's going to be a little rough ride with more sector specific or bottom of stock picks than taking a larger index view.
Okay, it will be sector specific, and of course, being more stock specific. That's prudent in this setup. But tell me, FIIs, of course, have been big sellers this year. $18 billion pulled out from Indian markets. But given the kind of sell-off we are seeing in the US market in terms of AI stocks, do you think there is a case that India may emerge as a diversification play if it comes when it comes to FIIs, when they look at diversifying away from AI? In that sense, do you expect FIIs to look at India perhaps early 2026? We could see a comeback. What's your sense, or would you say that they will choose the valuation comfort of China versus India?
No, I think the AI bubble in the US markets is something which is being talked about by a lot of people in that market, and that has led to a little bit of a cool off on the stocks and that space in general in the indices in US. Having said that, I think the FIIs have been in general sellers of India primarily. I'll say led by our earnings momentum cooling off, markets being at comparatively higher multiples still compared to what they are getting in other markets, especially the US, Chinese markets, etc. And at the same time, I think India has shown that in certain pockets like consumption, banking, large sectors, even materials, metals, etc., the country is having large businesses which can sustain 10 to 15% earnings growth. So definitely in certain pockets of the economy, the FPI, FII money is continuing to flow. Having said that, until the earnings momentum comes back, I think the FIs will also play the markets quite cautiously. India on a general FII list is usually between 5 to 7% of their global allocation. And as we understand today that we are at the lower end of the allocation. So as soon as I think our earnings momentum picks up, secondly, as soon as some clarity comes on India and US trade issues which we are trying to solve on the sidelines, I think as those factors start to dissipate and become more clear, I think the FII buying will begin to come in, which again, as I told on the earlier part, that it will be in the later part of this year than earlier.
Okay, got your point. But let's talk about some of the beaten down sectors like IT. It is getting a tailwind from the kind of fall that we are witnessing on the currency as well. And of course, the sector itself, the IT index is down almost 17, 18 odd % if you look at the YTD picture. Stark underperformance. But do you think that's giving investors a good valuation play on the value front? And of course, given the kind of drubbing that IT has seen, do you think that's one pocket that could take leadership in the next leg of up move?
Yeah, I think in the export-oriented sectors, we believe that pharma and IT are two sectors which have taken a significant hit. We believe that IT will be a sector which will see a faster revival than the pharma export-oriented businesses. So definitely IT is kind of a value play as far as we are concerned. The companies are sitting with tremendous amount of cash. They are working extremely closely with their customers in US, in Europe, and other parts of the world on their next set of technology transformations. So definitely, these companies will give more positive surprises than negative in the medium to long run. In the short run, though, there would be disruptions. We have to understand that the likes of TCS, Infosys, Wipro are large firms with multiple businesses, multiple verticals. So any such modifications or transformations will take some time to show in their earnings. But we believe that IT sector is best played in this scenario through mid cap and small cap names. Those companies are more focused on particular industries, particular technologies, and there also there's a lot of value sitting in those categories, and maybe that pack will rally faster, and we are more overweight on that pack than the large cap IT at this point of time.
Okay. Mid-cap IT, of course, that's how you should play the tech sector. But let's talk about banks as well. What's the call on banks after the recent RBI rate cut? And in terms of margins, of course, asset quality has been pristine for banks. But in terms of margins, do you think PSU banks are better placed? And in that sense, should one tilt more towards PSU banks?
Yeah, actually, we've been over the past 6 months been quite positive on banks in general, and we have been looking at the asset quality, which, as you said, has been quite high across banks, especially the larger banks. And there was a bit of overhang on the mid cap banks, and thanks to a lot of strategic capital and financial capital coming into the likes of RBLs and so on and so forth. There has been the banking sector seems well capitalized. Having said that, I think we look at banks in terms of course, the margin profile of the banks. We are seeing in terms of the price to book they trade at, and relative to that, what is the ROA of the bank. So from all of these perspectives, we believe that from a margin profile, among the larger private banks, ICICI Bank probably will be the most, I'll say, the strongest in terms of the margin profile which they are at, and their ability to control and to probably improve on their margin profile. But however, most of the margin improvement we see across the PSU pack, specifically SBI and BOB are two banks where we believe will be the top of the pack in terms of their ability to protect their margins or improve from here on. Thanks mostly to their low proportion of their revenue coming from fee income, which they are actually focusing on expanding quite rapidly. On the valuation front, also the PSU banks, they stack up quite well. They trade between 0.7, 0.8 times to 1 time price to book, while their ROAs are all between 1.1 to 1.4%. So PSU pack is something which we are quite overweight on in the private sector, ICICI Bank. Another pack within the banking sector which we like actually is a very interesting story around the small finance banks, and we believe whether the larger AU small finance banks to some of the mid-sized banks like Ujjivan and Equitas are also giving significant room for value as well as earnings growth. So this is actually also a big value play as far as the larger banking universe is concerned.
I think, I was just going through your report. You also talk about universal bank optionality, right? How real is that upside? And over time, over what time frame should investors actually think about it?
No, it's definitely a long-term play. Indian banks are still, I'll say, in a phase where they are rapidly growing their Indian market franchise. They are growing their fee pool in India. There is a lot of regulatory changes which are happening within the country as far as banking sector is concerned. So they are realigning themselves to the market. Having said that, a universal bank option is something which I think it will be a game of the larger players. So it will be best played by banks like among the larger PSUs and the larger private banks, I think, and within we are not looking at that as a big mover of value for the banking sector in the near term. The near term will be more defined by what we actually see on ground in terms of the bank's advances growth, the bank's margins. I think those factors will be more relative at play than the universal bank factor, at least from the next 6 to 12 months perspective.
Okay. Last couple of questions then. How are you positioned when it comes to OMCs? Crude prices have been comfortable, and OMCs as a pocket have done well as well. Do you see valuation comfort there? And what's the future trajectory looking like for some of these names like HP, BP and IOC?
Uh, Actually, we are uh, kind of equal weight on oil marketing companies. We believe that they are seeing significant volatility as far as the oil procurement is concerned. The demand pattern is decent. So a mix of the factors, we believe that oil marketing companies will be a kind of equal performer to the market. Within IOC, BPCL, HPCL, I think there isn't much to pick between the three. We believe in general this pack is undervalued. It is a value play. These companies are going to see they are actually organizing their business structure quite efficiently. As time has passed, they are looking to monetize some of their non-core assets, so they will continue to surprise us positively. It's a value play where definitely one of these stocks should be in the portfolio, from a value perspective, and from a growth perspective. I think they will generate between 10 to 15% earnings growth over the next 2 3 years on a CAGR basis.
Okay, got it. Also, what about some of these new age names? Off late, they've been witnessing profit taking, but Swiggy recently has raised 10,000 crore rupees via QIP. It is also, building its war chest and coming closer to eternal in terms of, how it plans to expand. How would you be approaching some of these names, especially at a time when they have, they are seeing some bit of profit taking? Do you think it's a good time to accumulate?
No, I think the entire sort of new age category, whether it's the the fintechs, the consumer techs, or any form of other tech SaaS business, etc. A lot of them have actually recently IPO'd as well. They will largely be defined by their ability to protect and build on their unit economics. The markets are looking at these businesses. Very, I mean, the most of the investors are actually becoming quite overweight on the technology space. Technology is going to be an important part of the indices, whether it's the Nifty or the Sensex or the other sectoral indices in the future. Technology transformation across sectors is real, but having said that, I think people are looking at companies which can show continuous improvement in their unit economics, can show consistent profitability and cash flow generation. So from that perspective, I think that will be the major thing which investors will look out. Of course, Swiggy's and Zomato's is a category where Zomato has shown the way on how the sector unit economics can play out. So a lot of hopes are there on Swiggy also to play, and their earnings to also kind of follow suit. Time will tell how that performs. But across the technology pack, I think the larger analysis across investor groups is to look at how they are able to build on their unit economics, how the profitability and cash flows pan out. They will always be faster growing businesses, given their technology disruption and the stack which they are built on. So definitely, those companies will be faster in terms of the top line and volume growth, and if they are able to turn around and their profitability, and then I think the earnings momentum in those companies can be quite significant. So all those factors put together, it's a big space which is overweight for most of the fund houses, and for our portfolios as well. But definitely profit is the key factor, and the profit growth will be the key factor over there.
Sure, profitability key factor when it comes to some of these consumer tech names. But last question, really, Nikhil, top three themes for 2026 as we wind down the year.
Well, I think the year, as we earlier spoke, is going to be can be quite volatile given where earnings growth are as far as our larger markets are concerned. And related to that, while markets are at a lower PE compared to its historical average, it'll be much more sectoral or stock specific driven. According to us, I think 2 3 areas which will shine the most. One definitely will be the larger financial space, the banking sector. We spoke about backing larger banks with deep value and good room for earnings growth. So definitely the larger banking space, wherein ICICI, BOB, and SBI will be our top three ideas. We also like the pharmaceutical universe in general, and within that, we believe that the companies which have a significant depth and leadership in the domestic market in India, but have a reasonable exposure to global market, not heavy on the global markets like US and all, like the Sun Pharma and Cipla in particular. They within the pharma pack, we are quite overweight on that category, and within that, these two companies. And lastly, we like the general energy transformation space, and we believe that companies which are actually playing in the transition space, energy transformation space through their platform, like the wind energy or the solar energy, I think, and data center, etc. Those companies will be key leaders of the future over the next 1 year as well. And from 2026, we are also quite positive on that category, in particular stocks like Inox Wind and Inox Green and Suzlon. Between these three names, we believe the sector should be played over the next 12 months or so.
All right, those were the crucial themes to watch out for as we head into 2026. With that, Nikhil, would like to thank you for taking out time as always. And if I don't get to see you this year, just about 10 more sessions to go almost for the year to end. Wishing you a very happy New Year in advance in case we don't meet. But of course, we will meet early next year, if not by the end of the year. Thanks a lot for joining in.
Thank you.
Thank you. Well, let's look at the market then on that note before we wind down. It's an 88-point cut on the Nifty. We are off those lows, but still around the 25,950 mark. Thankfully, we haven't taken out 25,900 yet. So as long as that holds, experts are saying that it's a buy on dip market and nothing really to worry about. Of course, it's the weekly F&O expiry as well on the Nifty. So there will be a fair bit of volatility as well. Breadth has improved marginally. So it's 2:3 now on the NSE. 1,057 advances to 1,587 declines. But some of the big losers today are the likes of Eternal. That stock is down 3% among the top Nifty laggards. Axis Bank is down over 3.5%. I don't know if there's some kind of news flow on Axis Bank, but that's the top Nifty laggard. It's down in excess of 3.5%. So yes, can't really see any news flow, but we'll see if there's something. We will of course report on that as well. But that's the top laggard on the Nifty right now. Some of the metal names are not doing all that well. The likes of JSW Steel, Tata Steel, even some IT names are under pressure despite the rupee weakening to a record low of 90.83. That's the record low that the rupee has made today. But the gainers list has, kind of expanded a bit. So that's some good news. Nestle is the top Nifty gainer. And consumption names in general are doing well today, even extending their gains from yesterday. Nestle, Tata Consumer, Titan, Asian Paints, these are some of ITC, HUL, all of these. Trent as well is doing well. You have some of these life insurers who are back in action. HDFC Life Insurance Amendment Bill, of course, will be in the Parliament today. So those are some of the stocks to watch out for. Both HDFC Life and SBI Life are up and about after a down day yesterday. Of course, 100% FDI cleared in insurance by the cabinet, but the bill will be in Parliament today. Interglobe Aviation, fourth straight day of gains, and some of the auto names that were out of favor yesterday, the likes of Bajaj Auto, have also edged back into the green. But yes, it's a 100-point cut as we speak now, so it's yo-yoing actually, so to say. We are back around the 25,920 mark. But let's see how things really pan out, because it is expected to be a choppy day in the week of the F&O expiry that we have today. But completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Of course, we'll be back with the markets at 3 p.m. So don't forget to tune in then. Till then, stay tuned to Moneycontrol for all your other news and updates. Thank you for watching.